All right, everybody, welcome back. Great conversation for you today. We had the CEO of OneBalance, Stephane. He came on, and a little known fact about Stephane, you guys have probably already heard of him, but he's also the founder of Flashbots, which is famous for kind of tackling the problem of MEV on Ethereum. So it was really good to talk to him about kind of some of his learnings from Flashbots that kind of he's able to apply to OneBalance. OneBalance is a chain abstraction protocol and toolkit for app developers to use to kind of build these chain abstracted, gas abstracted experiences for their users, and it's really exciting, in my opinion. If you guys have listened to this in the past or any of our previous episodes, I talk a lot about how shitty the user experience is, for lack of better words, in crypto, and how much worse it's going to get in the coming years due to the amount of L1s and L2s that are going to continue to pop up, and obviously the apps that go along with them, and the number of tokens and DeFi and other use cases in crypto. So it was really interesting to talk to Stephane today about their solution, and I think they've definitely thought about every player in the market in terms of cross-chain abstraction. So not only the users, but also like how do they make it better for solvers? And they've come up with some really, really simple solutions, in my opinion, but all that make a big difference long term, for the users and ultimately for the app developers as well. So hope you enjoy the episode. And if you do, obviously like and subscribe, and we'll see you on the next episode of Proof of Vision. Take care. All right. Welcome, everybody, back to another episode of Proof of Vision. Excited to bring another conversation surrounding chain abstraction today. We were just talking offline about how bad the UX is starting to really suffer even more in crypto as more L1s and L2s continue to pop up, more tokens, etc. But, warm welcome to Stephane. He's the founder and CEO of OneBalance. How are we doing, sir?
I'm doing well, yeah. Good to see you, Kirk. Happy to be here. Happy to be chatting. I haven't done one of these in a while, so I might be a little bit rusty, but this is a great way to get back into it.
Absolutely. Don't worry. We'll warm you up. Yeah. So obviously, along those lines, I always like to start off. Let's talk about your background specifically, even prior to crypto, unless you were born into it. Uh, what got you into crypto? What were you doing before this, and what made you kind of take the leap into the space? You know, what kind of caught your eye and led you down the rabbit hole?
So I'm a systems guy. I've been sort of fascinated with trying to understand various different systems since I was very young. I was lucky enough that the crypto boom was sort of starting when I was in college. And I was just amazed at how people within the crypto space were thinking of not just monetary system, not just financial system, not just technical systems, but sort of global coordination systems and how it sort of all fit back together. And the things that they were designing, the products and the protocols they were building had these sort of broad reaching implications. And so that's what got me into it. I joined the space in 2017. Initially from a research and smart contract security angle. Got lucky enough that I met some incredible people back then that eventually led me to the first company that I founded in the space, which was called or remains called Flashbots. I left that a few years ago, but through that journey, I got the chance to touch basically every single layer of the Ethereum stack, from the application level all the way down to the sort of node validator level. And so a lot of the lessons that I've learned and perspectives I've built over the years have led me to ultimately land at OneBalance.
Awesome. Yeah. I mean, I think if anybody knows the space even a little bit, they've heard of Flashbots. So yeah, it's great to have you on to talk about the new project. But I guess before we get to OneBalance, like obviously, Flashbots, tackles MEV among other things. Like what was, you talked about maybe some of your learnings or some of the things that you noticed when you were working at your other projects. Maybe like Flashbots specifically, what was something that you saw as you were building Flashbots that kind of inspired this thought of, hey, listen, somebody's got to solve the cross chain UX problem. What were some of the things that you learned maybe through Flashbots that you could apply to OneBalance?
For me, my entire crypto journey has been related to trying to answer essentially one question, which is um, what happens when you have these mechanisms that are digital and have really, really high levels of network effects? They bring sort of the entire world together to like operate on the same system. What are the implications sort of for broader society and for individuals when they start to operate against those systems? And this question applies both to sort of crypto and blockchains, the world computer, the currency to dominate them all, but it applies to things like AI as well. And that's really, this question is at the core of the entire exploration that Flashbots was based on. The research entity in many ways is about understanding MEV, which to me I sort of model as this principal agent tension between users of a system and operators of that system. In the MEV context, that is users that are trading on top of blockchains, on top of AMMs, and operators of the blockchains, which are validators. And MEV gives sort of like a value to the amount of money that is leaked from users to the operators. And so it gives like a very practical metric of the principal agent issue that arises in crypto. And I've always been fascinated with the idea of how do we build better systems? How do we build better tools that allow for users to retain more of that power versus the counterparty? And I think a lot of people have this kind of intuition when they talk about disintermediation and removing the middleman, etc. It's about building these similar types of tools. But what I found is oftentimes in crypto, there's sort of just the introduction of new middlemen that oftentimes can have even more power than the previous ones. And so really it's more about building tools that give more negotiating power for end users. And that get manifested in a million different ways, right? So at Flashbots, it was sort of like building trade execution infrastructure. In some ways, it was sort of trying to solve some of these things at the base layer directly within the node operating software. But even leading into Flashbots, I was always sort of more interested at solving the problem higher up in the stack. And at least my belief is within crypto, the right place to solve these kinds of issues is at the wallet level. It's basically at the highest sort of level of abstraction that you have, directly where users are managing their keys, how they go about managing their keys, how they go about issuing permissions, how they request different types of state transitions. For me, that's where the tooling it was severely lacking and continues to be lacking, and where we could have the biggest impact. So yeah, lesson learned from that time working on Flashbots and MEV is sort of like this view of the world of thinking of it as principal agent issues and friction arising from that. And now my model of UX friction is the same thing. It's users not having sufficient bargaining power versus blockchains and applications, etc., to sort of force them to provide better UX. And as you build out those tools, the entire space gets elevated and improves its value that it brings to the world.
Yeah, it's a good point. Especially in like there's like a third element that you didn't even mention there that you guys also solve for, which is like the solver side, right? Which is kind of giving solvers better tools as well, which ultimately gives the end user a better product. And I think, we'll get into it in a second, but like I think what you guys have done, thinking about both sides of that problem, is the right way to go about it from like a first principles perspective. And then also like obviously having a deep understanding of MEV and how it works. It also translates into this like cross-chain UX because again, I mean, you're talking about EVM, in terms of like MEV, you could be talking about, other virtual machines that have different forms of MEV, or, different things to consider when you're considering the MEV of that chain. So it's very critical, in my opinion, to like understand that deeply, because once you start having all these like cross chain transactions built on top of all that, then it really gets complex, right? You have to really understand how to guard against it, or how to, properly, I guess, manage that for both sides of the marketplace ultimately. But okay, cool. So like, let's transition then into OneBalance. Okay. I think in terms of chain abstraction, there's been massive marketing, I guess, around this topic, in the last year and a half. I want to say probably even beyond prior to that, with Particle Network, with Everclear, with some of these chain abstraction solutions. Maybe describe OneBalance and how you guys are attacking this problem. Describe the key elements of what you are building, and how you guys go about solving this cross-chain experience for the user.
Yeah. So I think, you're totally right. There's this sort of like this massive trend that this is riding, and, chain abstraction in some ways is more of a solution rather than trying to talk about the problem. But what we're seeing is a ton of new users that are coming into the space that have certain expectations over their user experience. And they're now mostly getting onboarded through, this rise in stablecoins, right? So stablecoins is kind of the wave that's bringing the new, age of users on chain, and they just have much different expectations than the traditional Web3 users, and it powers all this concept that now wallets have a lot more job to do. You sort of become sort of like a fat wallet thesis as opposed to a fat protocol thesis, and that's being reflected in sort of like inflating valuations for all the wallet products and wallets as a service products. And so that's generally the trend. I think like we're sort of seeing a lot more of the value and attention flowing to the higher level of the stack. And chain abstraction is one of the tools that these kinds of wallets have in their toolkit to be able to do things. The way that we like to think about chain abstraction is as providing a great user experience. So you completely remove the concept of gas, of bridging, and of chains from user experience. They can have an app that looks and feels like Revolut, but doing things on chain on any single chain, and they never really know that they're doing things on chain because they don't need to. All the complexity is managed behind the scenes, and they still have the sort of like great feeling of instant execution that they expect. From the OneBalance side, what we've built to enable this, we call it the OneBalance Toolkit, and it's a toolkit that any application can use to execute on chain. It's the way that we position it is it's the fastest, most reliable, and most cost-effective way to create one-click experiences for your users. And the types of apps that have integrated so far and seem to be liking a lot sort of falls in three categories. There's the stablecoin apps that we've sort of seen emerge, so they can access any token and any yield opportunity on chains. There's also what we call sort of like Web3 super apps. So these are like, you could call like perps aggregators or DEX aggregators, or even wallets that want to offer all kinds of different trading opportunities to their users. That's a big segment. And then the final one that's more emergent is AI agents. So AI agents, that are maybe, baked directly into a user's wallet, implementing some kind of automated trading strategy and whatnot. They can't deal with all the complexity of gas and bridging and everything else. And so all of that being automated is quite effective for them as well.
Yeah, no, it makes sense. And I wanted to double click on the concept here, because I agree 100%. Like, I think, it's drifting more towards like, one click access to DeFi, for example. Obviously, Robinhood has just made waves with kind of what they're bringing to Arbitrum. But even prior to that, just think about Robinhood for a second, right? The reason they're so successful is they abstract away kind of like this complexity of trading, right? And they just make it very like gamified, and make it very fun to use, and great UI, great UX. It's almost like those kinds of applications for every aspect of DeFi, I think are what going to like propel us into that next wave of adoption. And on the super app level, it makes me think of like Infinex. I don't know if you've heard of Infinex, but kind of what they're building is along the exact same lines of what you're talking about. And using something like the OneBalance Toolkit makes a lot of sense, I think, for these kinds of companies.
Yeah, exactly.
But let's
Like those are the players that are coming on chain. And it's very simple when you think about it. Like why are users going to come on chain? To me, the answer is, well, there's about 350 different tokens that can be traded on centralized exchanges, and there's about 15 million that can be traded on chain, right? And so the investment universe on chain is just so much bigger, and it's going to force everyone to come on chain at some point. It's just, if you want to do this as an app today, it's like incredible amount of infrastructure to build, and so it makes sense to use sort of a chain abstraction provider like us to do it.
Yeah, absolutely. So let's dig into like how this actually happens a little bit. Obviously, it's very technical. So what I'll try to do is make sense of it as best as I can. And obviously, you're here to help me do that. Let's talk about how you achieve this, though, right? So there's this concept of credible accounts, right, which is kind of like your I guess wallet 3.0, with lack of a better term. I guess talk about how you guys actually achieve this, right? Like how do you create a scenario where the user doesn't have to worry about the chain that they're on, they don't have to worry about gas. Let's talk through the flow there and like what are the key components of OneBalance that help you execute this.
Yeah, when we initially started down this problem space, we sort of mapped out the industry and we built a working group called the OneBalance Fellowship, and we brought together all the sort of key stakeholders to discuss what are the common issues everyone is having. And what became clear to us is that there was this problem throughout all the different solutions where whenever you wanted to do something cross chains, you had to first send a transaction on the origin chain, wait for confirmation, sometimes finality, before you could send a message to the destination chain and do a transaction on destination chain. And so they were sort of always stuck in this like framing that you need to do source chain, destination chain, which can take a lot of time, up to 20 minutes, depending on the finality of the source chain. And that just completely breaks UX. It breaks all kinds of different things around gas abstraction and whatnot. And so there was a need for a better architecture. So our contribution was to the space was resource locks. It's more of a sort of design concept than anything else, but it allows for locking some funds inside of some kind of escrow on the source chain ahead of time. In our case, directly into the user's account. And then it allows them to do transactions on any other chain without having to do a transaction on the source chain. And so when users deposit inside of a OneBalance resource locked account, they're depositing on any of the chains that they want. So they can hold balances anywhere and they can instantly use those balances on any other chain. And so it removes that source chain, destination chain, and converts any sort of on-chain operation to just be single destination chain inclusion speed. And so, yeah, this is the concept that Resource Locks offers, and that the toolkit is built on top of, and why our customers like the user experience that it offers. But we've been it's been really awesome to see other industry players adopt this as well. So the Ethereum Foundation has added this as part of their core interop roadmap, and recently Circle announced that they've integrated Resource Locks as part of their CCTP cross-chain protocol. And so we're seeing more players build on top of the same stack, which for us really validates the architecture.
Interesting. And so, I think I was reading in either your docs or some of the research you guys have published, but this concept of so that solves a problem for the users, though. Let's talk about the solvers. And obviously for anybody that's not really keyed into what a solver actually is, it's essentially a market maker, right? Or some kind of entity that is kind of shepherding these funds and executing the trade on the other side, or on the destination chain. But what does that solve for solvers? What is that unlocking for them that it also unlocks for the user?
Yeah. This is really deep in the weeds of how sort of interop in 2024, 2025 works. And it's going to be very different in the future. But the solver role has been, for the past few years, one that they sort of take on a bunch of different risk. They take on settlement risk, they take on finality risk, and they price that risk and then offer a way for the users to be able to get the execution that they want on a destination chain in exchange for like some fee that they pay for the risk. And so all the solutions that use solvers today have some kind of dependency on them for execution that includes like a markup on that covers all their risk, as well as covers the inventory that they hold. So these solvers would typically hold inventory on a bunch of different chains, and they have some kind of like cost of capital, right, that they need to cover to be able to front that capital, and so they'll charge for that as well. And so what we've seen is a lot of these solver systems can suffer from lower reliability as well as high cost. And so they achieve speed, but only on small amounts. And it's relatively expensive and unreliable compared to sort of other mechanisms. The cool thing about resource locks, as you sort of mentioned, is it helps manage the risks that the solvers are taking on. So because they're not exposed to source chain finality anymore, they're able to sort of quote better prices, and by extension also provide higher reliability. And so that translates directly for any users of our toolkit as like better, more cost effective execution.
Yeah, makes sense. And that really is the key there, though, is like, this pricing of the risk, this carry cost, translating to the user, and obviously the user experience now suffers because of the increase in the cost or the speed or whatever trade-off there is, right? And one thing I really like about what you guys are doing, like I said earlier, right, is you're kind of creating more optimal conditions for those solvers to then pass lower costs on to the user. But then it becomes a matter of, and I had the same conversation with Everclear a long time ago, but it really becomes a matter of like making sure that the solver space is competitive, to make sure that the fees are as low as possible for the users. How are you guys thinking about that right now, or have you seen that evolve? Where I heard I can't remember who told me this, but a long while back, this might have been a year ago, somebody just said, "Hey, listen, like there really is only like 3 or 4 solvers. It's like Wintermute, and then some of the other larger market makers that really can like fill this role until you kind of create a scenario where you can open it up to." And kind of democratize that a little bit more. But how have you seen that kind of shake out? And like, are you guys seeing that kind of happen as a result of these resource locks, where it's creating that environment? Or how are you guys thinking about that?
I'm not concerned about that. I guess
Okay.
having run solvers in the past and known a lot of the space, and back at Flashbots as well, dealing with all different solvers make a lot of money for short periods of time, but they can go out of business really, really quickly. Any sort of alpha decays quite fast, and you can get a lot of efficiency with just 2 or 3 solvers bidding for being able to fill orders. So I'm not that worried. I think there is sort of like natural scale economics in any business. And it's probably the case that solvers will end up in a similar place than market making is, and also market making in sort of traditional finance, where there's like a few different large players that have all of the sort of scale to be able to process and be competitive. But I don't necessarily think that means that their margins are going to be incredibly high. And so I think competitiveness on the solver front is pretty well addressed by like typical order flow auctions type of RFQ mechanisms. And I don't see that having a negative impact on quoting prices for end users long term. And then there's all kinds of tooling that can be built to sort of help solvers manage their risk and reduce their quoting, but it's an actually competitive environment, and I think that will happen on its own.
Awesome. That's good to hear. It's one thing that I always thought about, but it's good to hear that maybe it's not as big of a problem as what I thought. So we understand a little bit about OneBalance and maybe like how you guys are helping achieve this outcome for users. Want to dive into a little bit more from like a go-to-market strategy in terms of like the business element. You mentioned that users could use like a OneBalance toolkit, but I would imagine that this is more of like a B2B type play, right? Where you guys are selling this to apps that are building these user experiences for the users, or do you guys have any intent of kind of building your own kind of super app? Like Particle, I think ran into this problem too, and what they decided to do was build what's it called? Universal X, I think is what it's called. So it's an app on top of Particle Network. How are you guys thinking about that? Are you thinking about building something yourselves, or is it more a focus on like, hey, let's get every builder in the space that is looking at maybe like a cross chain integration using the toolkit, or maybe it's both. But maybe talk about that strategy a little bit.
Yeah, so our sort of like North Star is that we will succeed as a company when 95% of all users of crypto don't know what's chain that they're operating against. And the only way that we see us being able to succeed at that is with a B2B product. So we're not building like consumer facing product. We have a demo of our toolkit on our website called One App, which I encourage anyone to go check out to get sort of like a look and feel of what it's like to use a fully chain abstracted application. But that is not our play. Like I mentioned earlier, we have three customer types. We have Web3 super apps, we have stablecoin fintech apps, and we have AI agents. And then if I can maybe sort of like do a deep dive on a segment that has been growing a lot for us and where our customers find that our product is really helpful, it's on perps aggregation and perps trading. So we have a couple customers, one called Vui and the other one called Dexari, that have launched perps and spot trading aggregated platform on top of our toolkit. And what they love is that for their users, they can trade on top of any perps protocol and buy any token spot directly from the same application. And they have sort of like really reliable execution. The cherry on top for them is that we provide a very clean way for them to be able to monetize. So because all of the execution is abstracted, whenever their users interact on chain, they don't have to think about gas. They don't have to think about sort of execution fees, whatever it is. Every transaction comes with a fee on the execution, and that provides also a fee for our customer to be able to monetize, and it also covers all the execution requirements on all the different chains. And so it's a really, really clean user experience where they get just like a fee, either a transaction basis or a volume basis, and the application is able to monetize through that. So yeah, perps trading has been a great sort of growth segment for us, and they seem to be benefiting a lot from this type of experience.
Yeah, it makes a lot of sense. I mean, perps probably have the best product market fit of any of anything in crypto right now, because I think there's been insane growth for that on chain. Obviously with Hyperliquid and things like that. So I think it makes total sense. In terms of monetization for OneBalance, then, like where are you guys seeing this going from a business model perspective, where you guys can monetize this? Well, also obviously keeping in mind, obviously it's very early. I'm sure you guys want to grow and keep fees as low as possible, but where do you guys take your fees? Where does that go? And maybe talk about that a little bit.
Yeah, so our system is actually free to use, and people can build an entire application on top of it, and we don't charge anything for it. The way that we monetize is that if our customer decides to turn on monetization for themselves, right, we keep a percentage of the amount that they generate through the system. So our philosophy is we want to make money when our customers make money.
Gotcha. No, it makes sense. Obviously, I think that eases adoption as well, especially when you're early on. So I think it makes it simple. How about from this perspective? I think you guys have obviously the EVM covered. I think you guys have announced Solana support. If that's not already done,
Yeah, we just recently launched Solana, which we're really excited about. It was a long time coming, but now we have cover for all EVMs and Solana.
Yeah, it's great. And I think recently too, maybe you guys have talked about Bitcoin a little bit in terms of Bitcoin support. But I guess where I'm going with this is, when do you guys think, or how do you guys think about like a network that's hitting that threshold where you're like, hey, it might be worth it to actually integrate this this blockchain. So another one that comes to mind is like, obviously there's a couple up and coming, right? There's Monad. There's Mega ETH is coming. Well, that's EVM, but things like Monad, right, that haven't launched yet, but are getting a lot of attention. Obviously, are you guys looking at them already when they're that early, or are you guys looking in, I guess, more towards like, hey, they launched and they have a certain amount of transactions flowing through? Maybe talk about that a little bit. Like, how are you guys assessing these networks in terms of integration?
Yeah, obviously when you build something like this, you have to build it in a way that makes it really easy to go to all these other chains. And so we have a commitment to our customers. If they ask for a new EVM chain, we add it within 2 weeks. That's sort of how our operating model is. EVM chains, super easy. Obviously, when we go into Solana and like other types of VMs, there's a little bit more of a lead time. But our goal is whenever there is sort of like a new VM type that we add, it's a configuration, and then we sort of make some kind of SLA around how quickly we can add these new chains. So all the chains that you mentioned, as soon as our customers want us to add them, we will add them. If someone is launching a new chain and they're interested in getting that exposed to our customers, then they can reach out to us and we can talk about what that could look like. Obviously, if our customers want to integrate all the best chains, and so it's sort of like a two-way relationship there.
Gotcha. No, it makes sense. Yeah, because I like one of the big things is just like opportunity cost. Obviously, is very big. You can't integrate everything all at once. But I think taking guidance from your customers makes the most sense for sure. Because it's very, very hard to tell. I think if you integrate a chain, you spend a bunch of time, and that chain ends up like dying off because I don't know, everybody was chasing the airdrop and now everybody's rotating, as tends to happen in crypto, then you kind of run that risk. But I think if it's more of like a customer directed, initiative like you guys take, I think it makes a bit more sense.
The import for like EVM chains has gotten pretty sophisticated, so it's not that much work anymore.
Yeah, no, it's true. It's true. And if you're an ETH maxi like I am, then I think you're already well positioned in terms of like capturing the bulk of the the transactions that are going to be coming in the coming years. Curious on like the fintech side of things. Obviously there's been all this talk about institutional adoption of coming into DeFi. You guys are kind of at that gateway, right, between the two, where you're selling these fintechs and maybe some of these other entities on ways that they can offer easy access, to the opportunities. How have those conversations gone? Like, I always view it as like there's this massive learning gap, but things like what you're building could probably reduce that quite a bit. But how do you view that vertical for you guys? I know you said the fastest growing is really like the perps aggregation, but maybe the biggest opportunity long term is that. But everybody talks about the sales cycle of that, and it's a little bit slower. But how have you guys? How have those conversations gone? Like, what's been the general sentiment, maybe from some of these entities trying to access crypto?
It's definitely the most exciting growth area. I think the reality is a lot of these stablecoin apps don't yet do that much on chain beyond allowing their users to hold stablecoins and then doing like on ramp and off ramping. But where we found, the sort of interest and need from these customer types for the toolkit that we have is, I would say, around two segments. The first one is stablecoin abstraction. So this is the idea that the user could be holding the stablecoin on any chain, or it could actually be holding any stablecoin on any chain, and it shows up as a single balance within the application. And when the user goes to spend it, they're able to spend it anywhere instantly, and that involves also perhaps swapping it from one stablecoin representation to another stablecoin representation. So we offer all of that sort of abstraction for them, and that's been pretty exciting. Another one is to have sort of like a TransferWise sort of like feel to transferring stablecoins around. So whenever someone wants to pay someone else, oftentimes they have to like specify which chain and whatnot that it needs to be executed against. And some of these fintechs apps struggle to like do the inventory management across a bunch of different chains to be able to manage so like payouts. But all of that is handled behind the scenes within our system. And so they're able to just specify where they want, the payout to happen and in what currency, and we're able to manage the execution. And so those are kind of like the big growth areas that these players are interested in at the moment.
Yeah, absolutely. I guess speaking firsthand about this a little bit, so I've had dealings with a certain bank recently that's trying to come on chain, right? And they're talking about, hey, how do we tokenize our assets, and starting those conversations. And it's just funny how much they need something like what you guys are offering, where it's like, hey, listen, like we can handle all of this. There's an execution environment that you can just tap into, and you can get this kind of an experience either for your customers, or even if you wanted to utilize something like this for like your own internal operations in terms of remittance and stuff like that. So I definitely agree. I think that is the biggest, like most interesting growth vector for something like this. And it's going to be interesting to see how things kind of shape out in the future for you guys. So I guess on that topic too, let's talk about maybe the technical product roadmap, or otherwise, for the next 6 months or so, 3 months, whatever you want to call it. What's got you the most excited for OneBalance? Like, what's coming up that you think people should be excited about? What's got you the most excited in terms of opportunity on the horizon?
We announced our Series A in June and officially launched the toolkit then. And since then, we've already been sort of through like a massive growth spurt, and we're processing millions of dollars every week through the system. So for us, it's a lot of just going through the backlog of people who want to integrate this and making sure that we're sort of servicing all that they want. So we're kind of like in that growth phase, which is really keeping us busy. I think in terms of roadmap, I mean, it's just going to be to deliver more capabilities for our customers. So whether it's new chains, new sort of activity, like actions to take on chains, making execution just like that much more better. The North Star for us is we want to be the most reliable, fastest, and most cost-effective way to literally do any type of action on chain. And that just means that there's just constantly improvements to be done. So yeah, that's the roadmap. We just keep delivering that on that value proposition for our customers.
Absolutely. Well, I'm excited to see how it kind of takes shape for you guys over the next 3 to 6 months, because obviously, like I said at the beginning, it's such a big problem, and I think ultimately we're on the right track of solving it, and OneBalance certainly kind of gives us one solution that I think could work long term, which is key. But thanks for your time. It's been great having you on. For anybody listening to this or watching this at home, obviously check the show notes. We'll link you out to where you can find OneBalance, where you can find Stephane as well. And yeah, we appreciate your time. It's been awesome having you.
Yeah, thanks, Kirk. It's been great to chat. And like I said, our mission is 95% of people who use crypto don't know what gas or chains are. And I feel like we're not that far away. I think within, a few years, we'll get there and it'll be sort of the standard experience. But until then, we still have a lot of work to do.
Absolutely. All right, everybody. Well, thanks for tuning in to another episode of Proof of Vision, and we will see you next time.